Sanibona bafethu phila. Uh, it's been a long guy, it's been a long time, but I'm back now. Hey, this year into ziningi. Lokhu ngiyahamba, but I think now I'm back, so we can continue and work. So here we have a long-term analysis on Australian dollar versus the New Zealand dollar. The market was going down for almost uh almost 6 months. Let's just say almost 6 months. You can see here the market is somehow consolidation, but this is 12 months. We are not gonna rely on this, right? But we have to check the overall movement of the of this pair. So now you can see that the market was just consolidating for years. Hence, you can see this was around 2014, 15, 16 up until today, of which is this candlestick that is pushing down. So we'll go down with the time frame. Before we go down with the time frame, we have to identify the major support and the major resistance. So here's our major resistance. Here's our major support. So here you can see you have your major support. First time touch, let me change the color to white. First time, the market gave us the support. The market went up. It came back down to give us the support again, two touches. Hence I always say whatever you do in the market, if you are trading support and resistance, you need to check the touches that you have. So the market went up again. So here's your first time touch of the resistance, second time touch of the resistance. Now you have two touches of the resistance. You can also add the horizontal line like this here as your resistance. This one is what we call minor support and resistance. This one that I just identified, this one. Why I call it minor support and resistance, it is because of it is in between the major support and resistance. But as you're going to be going down with the time frame, this is going to be a major resistance. This is going to be a major resistance. We are on 12 months right now, so that's why I'm going to say this one, as we're going to be going down, the time frame is going to be our major resistance. So what we're going to do here, we will move down with the time frame just to see what is actually happening on other time frames, of which is important to do, guys. So now you can see, let me identify the resistance so that you guys can see. Here is your resistance, two touches on the resistance, two touches on the support. Always remember, guys, make sure you check the touches. Here, I think we have more than two touches, three touches here. We only have two touches on 12-hour time frame, three touches on this resistance. That means the higher the chance that the market will continue to the upside. So on 6 months, this is what we have. The market is just moving on the side. The market, we can just say the market is just consolidating. So we will just move from this time frame to 3 months time frame to just see what is actually happening in the market. So here you can see you have your trend line. This is what we have currently. You have your trend line. Here is your first time touch. Here is your second time touch. You get your entry on the third touch, right? Now that we are on 3 months time frame, it's not easy to just step in and buy here, right? The only thing that you need to do is to go down with the time frame to find the structure of the market, so that you can see that, oh, okay, the market is changing the direction. What do I mean by that? Remember, the market was coming down. You might see something like this. You need to confirm the structure as well. The market might come down a little bit, and then it will break. It will come back and test the structure. You might see something like a head and shoulder, but not always. Sometimes it's going to be something like this. The market will go up and come down, actually somewhere here, and then it goes up. Now that you see a structure like this one, this is where you need to pay attention. This is where you need to pay attention. A new resistance was created here, but on smaller time frame, or you can say a new high was created. Remember the structure of the market. Now the market, if it continues up, it will create a higher high. Now you have a new confirmation that confirms that, okay, the market is on an uptrend right now. Remember, on a higher time frame already, you got your pattern of which is going to be the trend line that we have right now. You know that, oh, okay, the trend line is there. Now you have to look for your entry. So we'll go back to the chart and see what is it we find on the chart. Let's see what is it we get on the chart. Make sure that you take your time when you analyze, you observe almost everything on it. So now we move down to smaller time frame to look. Let us adjust a trend line here to trend line here to so that you can almost see everything. Here is your first time touch. Here is your second time touch. It's visible. Now we are on monthly time frame. So it means the market was going down for almost 2 months. This is monthly as well. So for 2 months, the market was going down. Now, as the market was going down, what is it you have on the left-hand side that can cause the market to change the direction? You have a support here and the trend line here, of which is this one. Now you have two confirmation that confirms that the market might reverse. Two confirmations. Why do I say two? Let's erase everything and then apply the line chart. If you apply the line chart, you'll see what is it you have here, right? That's your support. That is your support. We're expecting the market to respect the support as well. The reason why we are expecting the market to respect the support, it is because of the trend line as well. It is because of the trend line as well. Remember, you have two touches. We trade based on two touches when we are trading support and resistance. But here, we'll take the trade based on the trend line. The support will be also our confirmation as well. So let's go down and see what else we have. You need to find almost everything that you can use as a confluence to take the trade, right? So now, let's check the current trend. So now you can see, let's identify this one as a minor resistant. Let's go to weekly time frame. Everything that we get from these time frames must correspond. So here you can see the touches are very much visible. Here is your first time touch. Here is your second time touch. This is your third touch. This is your third touch. This is where we're supposed to be looking for our entries. This is where we're supposed to be looking for our entries. So on weekly time frame, all these time frames are corresponding. 12 months is giving us a what? A buy. 6 months is giving us what? A buy. 3 months is giving us the same thing. Monthly is giving us the same thing. Weekly is giving us the same thing. So what else are we looking for right now? Because we are on weekly, we need to go to daily and check what is it we have on daily. Is daily time frame corresponding with the highest time frames or what? All right, let's go and find out and see what is it we can use. So here, this is our daily time frame. This is our daily time frame. On daily time frame, what is it we have? Here is your trend line. You can see that they penetrated the trend line and then they closed below the trend line. Can you see that? I'm sorry, above, not below. They closed above, they went below, and then the second candlestick went up. We will even look at the downtrend. Hence, I said, whenever the market is going up, you pay attention to the downtrend. Whenever the market is going down, you pay attention to the uptrend. So now you have this continuation pattern, but this continuation pattern is not valid. Why am I saying that? This candlestick, we are on daily time frame. The market opened rough here. The market went up to test the continuation pattern, and then it continues to the downside. This is where the market closed. The new candlestick opened roughly here. It pushed the market down. It went all the way up, and then the market closed here. This is our today candlestick. What are we expecting, or what am I expecting? I'm expecting the market to continue to the upside. Let's go down to observe what is it we have there. So this is, let me highlight this one. This white horizontal line is the support that I identified from, I think, monthly time frame. So let me erase it and go down with the time frame. We can even remove it. This one is coming from the line chart. So let's go to 4-hour time frame and see what is actually happening on 4-hour time frame. Here you have your minor support of resistant. Even if ungayisusa, but it's not looking nice, but it's accurate. Let me show you. Here's your support. Here is your support. It was broken here. It became a resistant here. Now, let's look at the structure as well. The market started from here, a continuation pattern. The market came back down. On your left hand side, what is it? You have a support again. It pushed the market back to the continuation pattern. The market came back down, a pullback. The market pushed down, a pullback, and then you can see the market went down to this level, and then it pushed a little bit up. It gave us this down move a little bit. This is where our horizontal line is. This is where our trend line is. And then the market went up. It closed somewhere there. Hence, you can see now you have a little bit of a downtrend. Now, let's go deeper to the structure then. What is it we see here? Use your line chart. This is what I was talking about. Look at this. The market went down. It went up. It came back down. Can you see that? Now the market gave us a new structure. The market went up, it came back, and then it went higher. Let's just pause there. We have broken the previous structure. The cell structure is already validated. Sesisibreakile istructure sethu esitshengisa ukuthi markets on the downside. Also at your horizontal line somewhere here, you will see the structure as well. Support, it was broken, it became a resistant. Uyayibona ukuthi istructure sethu sebasibreakile already. That shows ukuthi we're supposed to be pushing the market up. So what is it that you have to do? Remember, futhi again, I once taught you guys ukuthi supply and demand trader kanjani ngithi. So now here you can also use this one as your supply and demand. Uyibeke kanje. Your stop loss gonna be below. We are on 4-hour time frame. Angithi uyayibona market yakho yenze njani. Now let me erase everything ukuze sibone kahle yonke into. Now asiyibeke la as a horizontal line. So here, sinale supply and demanding highlighted yona now. Ime kanje. So uma ime kanje, the market was going up. Yabuya, yapushela phezulu. This candlestick was once green. Iphenduke somewhere izolo. Faka ilokhuzana yakhe trend line kanje. Uyiphushele le. They are supposed to go back to its structure. The structure sethi engikhuluma ngaso yilesi. Remember, ukuthi they don't go without coming back and take the orders that they left behind. So here they had a few orders left behind. So the market went up, it came back down to fill the orders here. They tried to push the market higher, they failed, they came back. There's a reason why they did not go higher. Remember, so many people will be like, oh yeah, we can see the break of structure here. We're supposed to jump in and get in and continue with the upside. Some will jump even here, and place their stop loss roughly below. That's 4-hour time frame. This is what the market did. It came back down. Now it will push up and come back and continue to the upside. This is what I'm expecting right now. You can even see here you have a resistant. It's gonna be broken. You're gonna get a retest and continue with the market to the upside. So what we're going to do here, we will change the time frame and move to smaller time frame of which is gonna be I'm sorry, I want to say we're going to 3-hour time frame, and nearly said 3 months. Now you can see this trend line. This trend line is the same trend line that pushed the market down, but we're not gonna pay much attention to this trend line. Add another trend line here pushing it down like this. This trend line that you see that I just added right now, it is also adding on the structure that we have here. It is also adding on the structure that we have here that shows ukuthi we're supposed to be pushing the market where up. Shukuthi manje sina two confluence that show that strengthen our buying angazi uyibiza kanjani, but whatever, but it has to do with buying. So here we see ukuthi okay fine, sina trend line, sina supply and demand. And then as we be going down with the time frame, you will see the structure ukuthi sime kanjani to get the confirmation ukuthi sizochubeka with the upside. All right. So now you move to 2-hour time frame. 2-hour time frame, it's a bit clear. This is the structure again. Esibona ukuthi sime kanjani. Use your line chart again. You'll see the same thing. Imarket yakho yenze njani here. Ibuyile yazotesta structure against support. It was broken, it became a resistant. It was broken, supposed to become a support here. Hence, you can see the market bounced. So now you know, okay, fine. Now this is what I'm expecting with the market to get to the upside. So as the market's gonna be continuing to the upside, what is it that you're supposed to do? You're supposed to be looking for buy opportunities. Right now, this is where you are going to get a good buy opportunity. But what you can do now, use this one. Add your horizontal line to the structure. They will break the structure like this. Once they break the structure, they'll reach this level and then they will come back and test the structure somewhere here, and then you get in, you continue to the upside with the market. No need to worry. That's how you're supposed to approach the market. Let's go back to the chart again. Let's move to 1 hour and see what is actually happening on 1 hour time frame. 1 hour time frame is also clear. Oh, I forgot to add something here. Can you see that? It looks like this. The structure that was very much important was here in the beginning of everything. This is 1 hour time frame. You use a line chart here, you'll see the structure. Go back to look at the videos that I did based on the market structure. You'll see something like this. And then a downside. Mine's gonna be a bit bigger. And then the market will push all the way up, and then it will come down to test the level, and then the market will continue. As the market is continuing with the trend on a higher time frame, this is where you get your supply and demand. Can you see that? If you look closer here, this is the structure that I'm talking about. The market was going down. It gave us the second time touch of the trend line. The market went up. It came back down to give us the third touch, and then it went higher, and then it has broken the previous high, and then the market came back to test. It shows that, okay, now we have changed the structure. What are we doing? We are pushing the market up. As we are pushing the market up, you can see what actually happened. All of these levels were broken. That's the signal that shows that we are on an upside. Remember, the market's not going to move straight. Now we have to pull back to this level, and then we continue going up. We're going to be somewhere here and come back a little bit and continue until we reach our take profit. Let me erase everything again. If you did not get everything I said, I'll advise you to go back to watch the videos that has to do with the structure of the market so that you can have a better understanding. This is what I'm talking about. This is the structure. The market went down, pulled back, downtrend. Again, the market went up. It came back to test the structure. Can you see that? And then the market continues to the upside. This is how you check ukuthi structure sakho sime kanjani, and then how can you use the structure to your advantage. Already on a higher time frame, also analyzile wabona ukuthi okay, my higher time frame is giving me buy opportunities. As I'll be going to smaller time frame, what am I looking for? I'm looking for buy opportunities. I don't just buy. Imagine you went to higher time frame. You notice that the market is an uptrend, and then what most people do, they will come back and buy here because of they've seen that the market is going up. They will forget to check what happened here as the market was pulling away from the trend line, from the support as well. So now they will step in and buy here. This is what the market did. Can you see that? Someone will be like, oh, flip. Here is the pullback. The market's on a downtrend now. They will expect to sell here. The market will go down. And again, expect anything in the market these days, guys. The market might even go down. You must also be prepared to look for another opportunity if the market's going to break the level that we are observing. Once the market break this and go down, wait for the market to come back here and then get in and then continue with the market like that. But now you know that from higher time frame, all you see is the market pushing up, the market pushing up, the market pushing up. Nothing more. We can even go further to smaller time frame to see what is it we have on smaller time frame. Let's go to 45 and look at what happened here. Take your horizontal line and place it here from your left hand side. Can you see how accurate it is? Support, 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 support. It was broken. It became a resistant. It was broken. It was tested as first time. Second time here, what are we expecting? The market to continue to the upside. Can you see that? Your job is to just observe what is actually happening. You can even add your trend line like this and see what is actually happening, but this one will be more visible as we're going to be going down with the time frame. Let me put it like this. As we're going to be going down with the time frame, we'll get more information. Let's see. This is 45 minutes. First time, second time, somewhere the trend line was broken. Let's go to 30 and see what is happening on 30 minutes. Let's check on 30 minutes. And then I adjust my trend line. Trend lines, guys, are very much important in the market. So I'd say it is important to learn how to use them. So now you can see what is actually happening here, right? The market is giving us a what? A buy opportunity. So what you're going to do here, you'll also move to 15 minutes just to observe and check what is it you have that you can use to your advantage. Now you use your line chart, you'll see a new structure being formed. So here you had your support, support, support. It was broken. It became a resistant. So the resistant was broken. What is it you're going to get here? A bounce back like this. It's your entry to get in. You go all the way up with the market. This is what you're going to see as the market is going up until it reaches you take profit. Whenever you do a top-down analysis, always make sure that you take these steps. Don't just jump in just because of you feel like, no, I have to jump in. Take all I don't know how to put this, but take all the steps from higher time frame, move down. You can also add the news event and check what is actually happening. What is it that you have that can change the direction of the market? Hence, you are expecting the market to go up. Can you see that? Okay, this is what I'm also going to add. This is where the market reversed. Now, this one is very much important. So many people are going to miss this. I hardly trade on smaller time frame. I have people that prefer to get sniper entries. I always hear people asking about how to get sniper entries and stuff and stuff and stuff. This is what you do. Hence, you analyzed, you got the direction of the market, you got the trend line on a higher time frame of which is somewhere here. This is the trend line, right? This is the third touch of the higher time frame trend line. I can even change the color so that you can see as we're going to be going to higher time frame. Let's make it green and then we move to weekly time frame. You'll see that this is the third touch. Can you see that? That's the third touch of the trend line. So now if you're on 15 minutes, this is what you're going to see. What is the third touch? This is 15 minutes. This is what you're going to see. The market was going up. It comes down, pull back, down again. It's more like a triple bottom here. And then the market went up. The previous structure was broken. Now, this is a signal that shows that we're going to push the market down. Those who don't have experience in the market, they will jump in. They won't even notice this continuation pattern that will push the market down. As you're going to be stepping in here, you need to also observe what is it you have on the current trend. They left a supply and demand in the beginning of a new trend, right? So what is it you need to do here? Hence, you'll know that the market's supposed to come back down to this level before it continues to the upside. Why? Because of they know that so many people will jump in here and expect the market to push up. Hence, they will jump in and expect the market to push up here. They will push the market makers will push the market down. What is it you have here? A supply and demand. This is what actually happened. The market came back down. Let me remove this one. This is where you are going to get your sniper entry. This was your entry, and then you continue with the market to the upside. If you do have a question, feel free to ask. Okwanamhlanje ngizoyivala lana bafethu kodwa nje I'm back with full force manje sizosebenza like before. So ningasakhathazeki, I'm back guys. If you do have questions, feel free to ask.